Ladies and gentlemen, good day and welcome to Lloyd Metal and Energy Limited Q3 FY'24 earnings conference call, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the end of presentation. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Mohit Lohia from ICICI Securities. Thank you, and over to you, sir.
Yeah, hi, good afternoon, everyone. Thank you for joining Lloyd Metals and Energy Limited Q3 FY'24 Concall. I would like to thank management for providing us this opportunity to host the call. From the management side, we have Mr. Rajesh Gupta, Managing Director, Mr. Riyaz Sheikh, Chief Financial Officer, and Mr. Chintan Mehta, Chief Investment Officer. Now, without further delay, I now hand over the call to Mr. Rajesh Gupta. Thanks, and over to you, sir.
Good evening, ladies and gentlemen. Thank you for joining us today for our Q3 and 9-month FY'24 results conference call. I trust this message finds you well. I hope each one of you has had the opportunity to thoroughly review the detailed earnings release that we released on the exchange and our official website. The results we are presenting today mark a significant milestone in our company's journey. I'm pleased to announce that we have surpassed the 5,000 crore rupees mark in revenue for the 9 months ended FY'24. This achievement underscores the robust performance and growth that we have experienced across all our segments: sponge, iron ore, power, and pellet trading. In terms of operation, our sponge segment has recorded its best ever quarterly performance. Guhu's plant, that is our first plant, has achieved the best quarterly production. Further, as a result of timely commissioning of the new Concall plant, the production is approximately more than 20% extra than the previous 9 months. Our iron ore segment continues its strong performance and remains on track to dispatch 10 million tons in FY'24. Additionally, our power segment has witnessed satisfactory traction with very good PLF as well as timely pricing strategy. During our board meeting in December and further in the last board meeting, we have outlined a comprehensive roadmap for the future. Our path forward is clear, and our execution team is fully committed to achieving our goals. We have established timelines for each of our projects and are diligently working towards them. To provide you with a glimpse of our future plans, we are moving towards forward integration operations to become a value-added steel maker with a 4.2 million ton steel capacity. This includes 3 million tons of flat products and 1.2 million tons of long products. That is a balanced portfolio. It is in 2 locations, ensuring proper distribution of resources. Central to our plans are the expansion of our iron ore production from 10 million to 55 million tons, with beneficiation playing a very crucial role. First time in the country, we will be mining and beneficiating low-quality BHQ of up to 45 million tons over a period. Furthermore, addressing logistics in steel making is vital, and we plan to do so through 2 slurry pipelines. This not only reduces freight cost, but also aligns with our commitment to environmental sustainability. Importantly, all our outlined plans are rooted in one key principle: internal accruals. We believe that establishing such capacities without resorting to debt will be a differentiating factor in our industry. Now I will hand over to Riyaz, our CFO, who will provide more details on our headline numbers and elaborate on any other questions that is asked. Thank you. Over to you, Riyaz.
Thank you. Good evening, ladies and gentlemen. I would like to express my gratitude to all the investors for joining us today. Without further ado, let's dive into our performance for the 9 months financial year 24, in case anyone hasn't had the chance to review our release. Our revenue for the period 9 months FY'24 stood at rupees 5,012 crores, reflecting a remarkable 92% year-on-year growth. EBITDA also experienced significant growth during 9 months financial year 24, reaching 1315 crores, up 88% year-on-year. The profit after tax reached rupees 967 crores during the same period. On a per ton basis, our iron ore EBITDA stood at INR 1,550 per ton, while sponge iron stood at 14,000 per ton. Now, moving on to our capital expenditure plan, as our MD, Mr. Rajesh Gupta, mentioned earlier, we are forward integrating our operations to become a value-added steel maker. Our proposed capacities include pellet plants of 12 million tons, DRI of further 0.36 million tons, wire rod of 1.2 million tons, blast furnace and HR coil for 3 million tons, 2 slurry pipelines of 85 kilometers and 190 kilometers respectively, a beneficiation plant and a coke oven of 1.8 million tons. These projects are expected to roll out in phases over the next 6 to 7 years. As emphasized by Mr. Gupta, all our capital expenditure will be financed through internal accruals, adhering to our fundamental principle. To provide a snapshot of our 9-month FY'24 capex number, we have spent around 880 crores till now. It's worth nothing that due to our integrated operations, it worth noting that due to our integrated operations, our cost of production is anticipated to be among the lowest in the Indian scenario. With that, I would like to open the floor for any questions or clarifications you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touch-tone phone. If you wish to remove yourself from the queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Siddharth Gadekar from Equirus Securities. Please go ahead.
Hi, sir. Good evening. So the first question is related to our capital expenditure plans. Can you just share that how, in terms of the timelines, when do we expect these projects to come online, one, and how much will be the capex each year? Like, what will be the cash outflow in FY'25, 26, and 27?
So, we are doing, like I mentioned earlier, we are doing these projects in various phases. First phase in the Chandrapur Roos plant is for the DRI expansion and the power plant worth around 250 crore rupees, 350 crore rupees. This is in Chandrapur. Simultaneously, the first pellet plant in Konsari will be coming up of around 1,100-1,200 crore rupees. Sorry, 1,700 crore rupees, along with the pipeline of 550 crore rupees. So this is the first phase. These two projects will be commissioned by 25-26. By that period, these two projects will be commissioned. Each year there will be an outflow of various amounts with the peak of around 9,000 crore rupees.
So is it fair to assume that we would have roughly around 2,500 to 3,000 crores capex every year over the next 3 years?
Roughly, yes.
Okay. So, and secondly, now in terms of our iron ore volumes, for the fourth quarter, given that we have capacity constraints, we would be only restricted to 2 million tons. Is that assumption right?
A little more than that. The capacity constraint is limited to 10 million tons total.
Correct.
1.8 million tons.
And for FY'25 and 26, how should we look at the volumes?
FY'25, 28, we will be applying, we are in various stages of applying for the expansion of the mine. By the end of the year, if we get the expansion, we will be a volume of around 12 million tons.
Okay, sir. Got it. Thanks.
The output of the next year would be 12 million tons.
Okay. Thank you.
Thank you. We have our next question from the line of Jatin Damania from Swan Investment Managers. Please go ahead.
Thank you for the opportunity and congrats on a good set of numbers. So, as you pointed out that the Q4 numbers will be restricted because of restriction in terms of the overall volume. But since you have given the aggressive plans of 55 million tons of the iron ore capacity, so can you lay out which stage are we in and what exactly are the approvals we are awaiting for to reach from 10 to 55 million?
Various stages of the mining approval expansion. First, we have to apply for a mining plan, which is under process right now. Next would be the EC clearance, which will also entail a public hearing. And finally, we'll get the EC itself. And then, of course, expanding the mine also to achieve that much quantity and the logistics part. So, logistically, we are well aligned with increasing our output in the short term and the long term. In the short term, there is a link of roads which have been expanded to make sure that the surge of output up to a dispatchable output of 25 million tons would happen. That's the logistics. On the EC approval, etc., the process is well set by the MOEF, and the mining plan has been made already internally. It is awaiting approval from IBM, for which various site visits, etc., would be required. So we hope that the whole process will be over by December of this current calendar year.
So by December, we'll get an approval for the 25, or probably we are taking approval for the entire 55 million tons of the capacity that we are ramping up?
So the 55 million ton is the total mining that we will be doing.
Yes.
Out of which, in the long run, it will be 10 million tons of what we call DSO, direct sales zone, and 45 million tons of BHQ. The BHQ would be beneficiated in the long run to 15 million tons down. So it will be 10 plus 20, 15 million ton, total 25 million ton output. That is in the long run. In the first year, around 20-25 million tons in the first 2-3 years till the beneficiation plant comes up would be mined directly. Given the overall reserves that we have, we can achieve that, and we are working towards that.
So, sir, when we talk about the BHQ, we will be setting up the beneficiation process. So, correct me if I'm not wrong, because as an Indian players are restricted to simple set up the beneficiation plant, and we were planning to improve the content of the ore from 40% to 60%. So what are the process, and are we approved players in terms of the expanding the only beneficiation?
So I don't understand exactly your question. The beneficiation of BHQ would be a first time in India. It is a well-practiced process in the European countries as well as in China. China mines around 300 million tons of BHQ and beneficiates from around 28 to 65%. Our BHQ is around 35% and will be beneficiating up to 65%, 66%. All the technical studies of that are underway and have taken place already. We have signed contracts with technology suppliers in China for this purpose, and we are ready to apply for the necessary approvals to the Government of India, again MOEF, for that.
So standalone beneficiation plant would be possible, right, for us?
Yes.
And so what would be the cost that we will be doing it, because you said that you will be importing or you will be using a Chinese technology. So
around
what is the
5,000 crores is the total cost that is envisaged over 3 phases.
So okay. Thank you, sir. That's all from my side.
Thank you. We have our next question from the line of Ruchita Kagde from iWealth. Please go ahead.
Hello, sir. Very good evening, and congratulations on a good set of numbers. So my question was more on the side of this 45 million BHQ capacity, So just wanted to understand by when do you expect this to come on board? And when you say that, initially you will be mining around 20-25 million tons, and post the beneficiation plant comes, you will do 15 million tons. So when is that beneficiation plant expected to come on board?
We expect that the first plant would come up by the latter half of 25-20 at the earliest, and 26-27 definitely for the first plant, and then every year one plant subsequently.
Sorry, sir, actually your voice is a bit muffled. If you could just speak again. Hello?
On the earlier side, we expect that the first beneficiation plant would be commissioned by 25-26 second half. On a worst case scenario, 26-27 would be the first phase of that plant, and then every subsequent year one plant each of 15 million tons each input and 5 million tons output.
Okay. Understood. And, sir, what is the realization and the profitability difference between, 65% content versus a 35%? If you could give a broad understanding of that.
That 35% content is not considered as iron ore, but is considered a waste product in Indian parlance.
Sir, sorry to interrupt.
Yeah.
Your audio seems a bit disturbed. Can you please take the mic? Sir, there seems an background noise.
No, there's no background noise here at all.
Okay. Yes, sir.
So 45% is the break-even level for considered as iron ore in India. 35%, like I said, would be the first time it's being beneficiated.
Okay.
Yeah, and 65% would be, given the chemistry, it would be a much heavier premium than the 63, 64 that we are currently mining.
Understood. So till the time the beneficiation plant doesn't come up, you cannot sell this.
It is not a sellable product, no.
Understood.
You will be selling 62 to 64% iron ore till the beneficiation plant comes up.
Okay. And sir, this DRI and pellet plant that you spoke about, around 1,700 crore, which is going to come in FY'25-26. What is the capacity for it?
The pellet plant capacity, 1,700 crores is the pellet plant and 550 crores is the pipeline connected with that. The pipeline capacity is for 9 million tons, and the first pellet plant is for 4 million tons.
4 million tons. Okay. And the rest would come when, sir? The remaining 8 million tons?
A year after that.
So 26, 27.
27, both the plants will be commissioned.
Okay. Understood. And similarly, sir, for your blast furnace and your wire, if you could just tell when exactly you're expecting this to come up?
So we expect it to come up between 26, 27, 27, 28.
26. So it's going to come in phases, is it?
Yeah. No, not in phases. There are 4 or 5 plants in that chain. So
Okay.
the plant would ultimately produce 1.2 million tons of wire rod. So various commissioning would happen from the end of this year, 26, 27, to the beginning of the next year, 27, 28.
Understood, sir. Understood. Thank you so much, sir.
Thank you.
Thank you. We have our next question from the line of Rakesh Roy from Omkar Capital. Please go ahead.
Hi, sir. So my first question regarding realization. So how much realization in Q3 for sponge iron and iron ore?
In the 9 months.
Yes, sir. For Q3, sir.
Yeah, for first Q3, the realization for sponge iron was 38,000, close to 38,000, and iron ore was 5,500, close to 5,500.
And Q2, sir, how much? Both?
Q2, it was iron ore was 4,600 and sponge iron was 31,700.
Okay, so we have taken a price hike in this one, Q3.
Q3, there was a price hike, yes.
Okay. So my next question is regarding your volume. Sir, currently we have total capacity of 10 million ton. Na? So you say this year will how much for FY'25? How much volume you are targeting, sir? Or you are saying nearby 20 million ton?
FY'23-24 will be 10 million, and FY'24-25 should be close to 14 million tons.
14.
Yes.
Okay. Right, sir. Right, sir. Thank you, sir. Thank you for my sir.
Thank you, sir. We have our next question from the line of Nikunj Lahoti and shareholder. Please go ahead.
Uh, Sir, I have a question. You would be mining 45 million ton of BHQ, and the output would be 15 million ton. So, what would be approx cost of mining? Would it be like for cost of mining for 45 million ton, but output is 15 million ton? And what would be the cost of beneficiation? If you could give some.
We anticipate the total cost of beneficiated ore X royalty would be around 1,200 rupees.
Okay, so it's like the same of iron ore cost only. Like currently you are
Yeah,
producing.
you can say that. You can say that because we are handling 3 times the material, so that the mining cost is actually lesser. But because it is 3 times and there's a lot of waste product, so yes, you are right.
Okay, so sir, approximately 1,200 per ton for
Yeah.
for BHP. Okay, thank you, sir.
Thank you. A reminder to all participants, you may press star and one to ask question. We have a next question from the line of Kanishka Sorkar, an individual investor. Please go ahead.
Hello. Hi. Very good evening to all of you. My question is that this BHQ beneficiation, which is being done for the first time in India, there are no established players. I would wish to understand how does this economics play, since you're putting a large amount of investment into this particular one and getting the technology from China. So if you could please walk us through this particular, how does it add value to the business? And the economics of this against the current, the grade which you are selling and the process which you're going to put in and the kind of margins that we can make.
Okay. Firstly, let me clarify and highlight that it is the first time in India, but not the first time in the world. It's a well-established practice to beneficiate BHQ or BHJ, banded hematite jade, in other parts of the world. It's a series of magnetic separation and flotation that is being done. And we have sent our samples of the BHQ to 3-4 parts of the world where this is already being done, in 3-4 countries where it's being done, including in more than one lab in each country, as well as in 2-3 labs within India who know the process. We are also simultaneously creating a pilot plant study in our mine for this process of 5-6 tons, which will be ready in the next 2-3 months. So by the time the process is being engineered, by that time the pilot plant study would prove the proof of concept, number one. Number two, the economics, like the previous speaker asked, the cost of mining is very similar to what we are doing right now, the cost of output of the ore. But that's, having said that, we feel that the royalty will be very less. That's one part of the economics. But most importantly, this reserve of 800 million tons will yield us output of 250 million tons over the life of the mine. Now, this 250 million tons would otherwise in the country, as is the current practice, would have been a waste product. Yeah, and we would have spent money to dump it and level it back into the mine. Also, because of this beneficiating this BHQ, the ore which lies under this, the direct ore which lies under this also can be utilized. So we are able to utilize around 300 million tons extra ore because of the beneficiation process.
Right, right. No, it makes a lot of sense.
Yeah. The most economical and a key part to our whole life cycle.
So, sir, does it mean that if I see the total, yours is going to be an integrated steel plant over the next 6 years, right? So, if I take all of this into account, so your unit economics, if I take the every part of the steel business from mining till the finished product and pelletization, beneficiation. So, on the unit cost side, does it bring down the cost further down because of addition of this beneficiation?
Further down from where?
in terms of unit price, like you said, you are a very efficient steel
But
producer.
down from what level? From if we were to use iron ore mine or if we were to use outside ore?
No, I'm saying from the iron ore mine. If you're using the iron ore mine and if you're using the beneficiation part of it.
It would be similar to that. But again, let me repeat that with this we can sell more pellets, we can make more steel over the life of the mine. And we can sell more iron ore.
Yeah, understood. So just one thing.
More or less the same.
Okay.
But if the quantity increases, the viability is 300 million tons into 4,000 rupees, 3,500 rupees over 50 years.
Yeah, right, absolutely. So, sir, this one thing I just want to add here, since you are going to be the first company in India putting this up and you're also doing the proof of concept, and I'm sure you would have already done a lot of the study, otherwise you won't be entering this particular site. Would that also open up an opportunity that if you stabilize this over the next, let's say, 6-7 years, and you are in a place where there are a lot of mines around and others are not using that, and therefore possibly that is a waste product. So would that become a big business going forward?
That's a very interesting question, and if I had not known better, I would have had some inside information from my company. We are at the highest level, are discussing various aspects of how to monetize that post our success in this plant.
Right, sir, right. Thank you so much. Thank you for the inputs.
Thank you. A reminder to all participants, you may press star and 1 to ask question. We have our next question from the line of Pallav Agarwal from Antique Stock Broking. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon.
So, I think we've taken a price hike in the iron ore in Q3. But if I look at the EBIT per ton on a sequential basis, from 2Q to 3Q, there's not been, corresponding increase in that. So, have our costs gone up in that segment in the third quarter?
Yes. There is an increase in the cost in the third quarter on account of this road constructions and what we have, and also the fines generation has been more than what was anticipated and what was there in the last quarter.
Okay, so but the blended realization would include fines as well, right? So that would include both of them.
Yes.
Okay. And so could you just also clarify on what is the current royalty structure that we are paying on, iron ore mines?
Royalty is a factor of the sales price. It's 15% royalty and 30% of the royalty as DMT, DMF, and NMET. So it's around 19.5% of the sales price. The current royalty is the end royalty that is debitable to the company is based on that. Current is on the ASP, and then the government corrects it over a period, and it has to be paid. So that royalty is constant for everybody. We continue to pay no premium on our products since it's not an auction mine.
Right, and the life of the mining lease is valid for a pretty long time.
2057, yeah.
Sure, sir. Okay, yeah, thank you. So that's my side.
Thank you. Participants, if you wish to ask question, you may press star and 1. We have our next question from the line of Nikunj Lahoti, an individual investor. Please go ahead.
Sir, I have a question. Do you have any plans of acquiring new mines through auction?
At the moment, no, Nikunji.
Okay, thank you.
A reminder to all participants, you may press star and 1 to ask question. We have our next question from the line of Siddharth Gadekar from Equirus Securities. Please go ahead.
Hi, sir. So just one more question on our realization side. Given that NMDC has again recently taken a price hike today of 400 rupees per ton, is it fair to assume that even we could take a price hike in the fourth quarter now, given that NMDC realizations have moved up?
So yes, it's a commodity, and generally speaking, commodities move up and down for most vendors together. So I won't say we have taken a price hike. I would say we have probably already gone a little ahead of that. We're a little ahead of the curve right now.
But there is no possibility for another price hike, given that it is almost a 10% price hike for NMDC.
No, like I said, we have already increased our prices to some. We don't have a price announcement scheme like NMDC has. It's more on a spot basis, and from time to time we adjust our prices. And yes, we have taken price rises in the past, and we would definitely look at any opportunities to maximize our revenue either way.
Okay. So secondly, in terms of the pellet volumes, what were pellet volumes this quarter that we have done from the Goa plant?
So the Goa plant is basically a trading activity. We are selling them all the iron ore that they require, and we buy back pellet that we are able to export. We have purchased around 225,000 tons of purchased and sold 225,000 tons of pellets through four shipments. Through four shipments in the world. All four are export, and this is for around first time in Kenya from India our material has gone.
And for FY'25, could you give some guidance in terms of our pellets, that what could be our targeted pellet volumes that we are looking at, given that we are seeding the market currently?
So that plant is can produce up to 1.8 million tons. We hope to supply them that much iron ore. In terms of pellet purchase, it can depend on various factors, including what is the profitability we get, and so the idea of the pelletization pelletization sales is to get seed marketing. So we have achieved that to some extent, and we continue to do that. I would say around 500,000 tons would be the volume in the coming year, but that's a very it can change very dramatically over months only.
Okay, got it. Thank you.
Thank you, sir. We have our next question from the line of Mangesh Kulkarni from Almond Global Securities. Please go ahead.
Hello.
Yes, please go ahead, sir.
Yeah, sir. Thank you for giving me this opportunity. I just wanted to understand this expansion timeline. If you could provide us in a tabular form with year-wise capex as well as the timeline for the commencement of the commercial production, that will be helpful in the presentation itself.
See, it would be difficult on a phone call to explain you the timelines and the cost, but obviously, yes, we'll be trying to put it in the next invest presentations.
That will be beneficial for us.
Yes, we take that point and we would be incorporating it.
Thank you very much.
Thank you, sir. We have our next question from the line of Kanishk Sorkar, an individual investor. Please go ahead.
Yeah, hi, sir. Once again, I want to understand. So I was going through, various reports, and there is something very interesting which you guys are branding the pellet. And I wanted to understand, since you said that this is a commodity business, is there any particular reason to brand it, and does it give us any specific benefits in terms of margins when we brand it?
So, Kanishji, I think you asked the most interesting questions. LML Pel is something that I have personally tried to push as a concept. Yes, it's a commodity. The problem in pellets is that people have tried to make higher grade pellets. Our pellets are 65% minimum. People are making higher grade pellets, but the consistency doesn't happen because of the availability of iron ore. So the higher grade iron ore that we are producing, we are sending to MRPPL, and they are producing pellets out of that, and and that's what we are buying back. So with the higher grade focus, and mind you, we'll be producing 8 million tons of pellets in the next 2 years, 3 years, 4 years. So we have to look at how to differentiate ourselves from the rest of the market. If the guru of the industries of branding was Tata, who started Tiscon TMT, which was unheard of that time, we thought we'll start small by branding our pellets as well.
Okay. So one more thing. You are kind of like couple of things. You have the renewable power. Basically, that's one part. Second is you're using the slurry to move the ore from one part to another part. So typically, the transportation is almost taken kind of, fossil fuel is kind of cut. Now, all this over a longer period of time, does it bring in any kind of, the green part of the business, and does it have any kind of opportunity to earn carbon credits?
No, none of these projects actually earn carbon credit. It's not qualifying for that. For example, pelletization, etc. We cannot prove the individuality of the project that without green carbon credit, the project is not viable. So we are not claiming any green in the pipeline. In the beneficiation, we are studying whether it is possible for us to claim that. That study is not yet over. In the power plant, in our Goose plant, we have been claiming carbon credit for the last 4 or 5 years now.
Okay.
Yeah.
Right, sir. So, and a very different question I want to put to Mr. Gupta.
Answering the green question, though our process looks on the face of it the traditional blast furnace route, but the way we are producing the ore and the closeness to which we are producing the ore and with the transport mode, the net carbon input into the furnaces is much lesser because of the raw material itself.
Right. So, and a very different question, nothing related to this company. So, I'm also a shareholder of your other company, which is Lloyds Engineering. And it's a personal request. Would it be possible for you to, because this company is getting a lot of traction and a lot of things happening that side also, but if you could organize a phone call for that?
I'm a shareholder in that company like you. I'm not in the management of the company.
Okay. But would it be possible to communicate to them to kind of hold a conference with the investors?
As a shareholder, I will definitely request them.
Sure, sir. Thank you so much.
Thank you. We have our next question from the line of Rakesh Roy from Omkar Capital. Please go ahead.
Sir, yes, sir. Sir, just you mentioned that your pellet volume for this quarter is nearby 2025 ton, na?
225,000
tons sold.
225?
225,000 tons.
Okay, 225? Okay, 1,000 tons. Okay, right, sir. So, next question, sir, regarding BHQ, you are targeting nearby 55 million ton. So, out of 55 million ton, if I'm right, is the 40 million ton by BHQ and the remaining from normal, no?
No, let me clarify again for the sake of making sure there's no misunderstanding. 55 million tons will be the total ore output. 10 million tons will be direct sales ore, ranging from 58 to 62%, 64% in output. And 45 million tons will be BHQ, which would be beneficiated down to 15 million tons of usable ore.
Okay.
Concentrate. Or would be 15 million tons of concentrate, roughly.
Okay. Right, sir. Thank you, sir. Thank you.
Thank you, sir. We have a last question of the day from the line of Ruchita Kagde from iWealth Management. Please go ahead.
Thank you, sir, for taking my question. Just one question. What is the payback period, that we have on these capex? If you could give a broad number on that.
So if we don't calculate the EV of the input capital, it will be 3 to 3.5 years based on transfer price at market levels. Each of the projects, that's what internally we try to focus at 100% capacity. That is not always the case. It may be little less, little more, but that is the idea to get that output out.
Okay.
We feel that that is again a very important question that you have asked us, and that's the reason why we are trying to have zero debt in the company. Because if we have any debt, this payback, what we call payback or IRR, multiplies by 3 to 4 times, which makes it a very much more difficult process. So we are trying to avoid that.
Understood. Thank you, sir.
Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Rajesh Gupta for closing comments. Over to you, sir.
Thank you, everybody. Some of these questions have been very, very interesting and thought-provoking, and I thank everybody for participation in this conference.
On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line.